Hello and welcome back to the Modern Stacker. And it's been a while since we've done a video, but I had a good one today. I saw a video that I just got me inspired to kind of come back out of hiding and talk about some stuff. Today we're going to be talking about the DXY, the dollar index, and we're going to learn a little bit about this. So buckle up if this is something that interests you and how it relates to gold and silver and precious metals. So I want to first begin off with, what is the DXY, right? I mean, if you've ever gone out to TradingView and looked up like it's the US dollar index, okay? What is that? Well, an index is a value that's basically derived by usually a collection of other values that are tracked on the markets. And in this case, you can see right here, it's actually tracked by a weighting of a basket of currencies with euro, Japanese yen, the pound of sterling, Canadian dollar, apparently the Swedish krona, I think I'm saying that right, Swiss franc. So it takes these into consideration, and that's how it derives its numbers. So if you look back, I think it started around 1967-ish, and it's been tracked ever since. And so what you should see as you look at this chart, you should basically see the history of the strength of the US dollar in terms of a global scale, specifically with regards to Western partners. There are different indexes you can look at, but the DXY is one that is a very good leading indicator for how the US dollar is doing throughout the world. So the reason I wanted to kind of show you this is if you're looking at the DXY, you can see effectively what's going on in the precious metal space. And you can almost, without even looking at these charts, you can see that if it's up here, then in precious metals, it's going to be down. So like if I go to gold, for example, sure enough, it's down. If I go to silver, sure enough, it's down. And if I go back here, there was a big drop, right? Big tear. This is like 2003, 2007, big crash, the Great Recession. And then right here, there was some like volatility in this space. What happened? Gold's on a tear. Silver on a massive tear up to here, to the point maybe it was even a little too high. But then the dollar started to regain some strength and some stability throughout the global economy. And right around here, from about 2015, 2020, okay? 2015-20, nice gap. 2015 to 2020, things got a little quieter in the gold market. Also in the silver market, silver dropped back down to more sustainable values. So it went from, what was it, like $4 to $8 an ounce to hovering at a baseline of $16, $18 an ounce. Now, why is that? Let's think about this. Let's unpack this for a second, because something that was brought up today that had me scratching my head a little bit was there was a comment that was made that had to do with the fact that silver, because there's an abundance, this is what's keeping the price suppressed. I'm not going to say I agree with that. And that's not to say that I disagree with the point. I do agree that there is an abundance of silver, but there is a suppression of this metal in particular. And you can see that very clearly with regards to gold. It's all here in the charts. The charts don't lie. If silver and gold were truly in parity, then you would see this. Yeah, you go here, here, and then here, and it would keep going. But there is clearly a suppression right here. This should be going up. And this is why a lot of the quote experts are saying that silver should be at a spot price around $36-40 right now. It's because if you look at, because it has historically held a parity with gold. Now, gold is a more valuable precious metal, as we all know, but you can see the track. It follows gold very closely. And it has always been the case. So this isn't news. The news that's happening here is that something happened. And for whatever reason, silver just stopped. And given all of the uses for silver, given all of the commercial uses for silver, giving all of the military industrial uses for silver, giving all of the economic purposes and uses of silver, there's no reason that this cannot or shouldn't be staying in parity with gold. Okay? So that's the argument that's being made, and I'm showing you the information. You can do with it what you will. But the reason I wanted to show you that is because what is causing the price to go up or down? It is not scarcity that is driving this. What's driving this in particular is the US dollar. You can see the correlation. There is a direct correlation between the US dollar and the price of silver and gold. And if you think about it, spot price of silver, spot price of gold is derived out of US dollars. Okay. So if you're going to purchase something in US dollars and for whatever reason, the valuation of the US dollar is going down or in decline, then it's going to cost more to purchase an ounce of gold. It's going to cost more to purchase an ounce of silver. And yet for whatever reason, that's not the case today. So this is why it makes, I see silver, as many other experts do, as a very interesting play. I think it was Gregory Mannarino calls it the most undervalued asset in the history of assets. And maybe that's true. I'm not going to jump on that bandwagon with both feet, but at least one foot for sure. But the key thing is here, if you look at like what happened here that caused the dollar to do this, and then in parallel, spot prices go from $6, $7 an ounce of silver to now its baseline is 16, 17, and now the baseline is 2023. It's not demand, folks. What it is it's inflation. The more money that gets printed, the less your buying power retains. And this whole chart is based off of US dollars. So if you understand that principle, that when you're purchasing precious metals down here, when you're purchasing precious metals down here, when you're purchasing precious metals down here, if there is indication that the US dollar is going to continue to lose value in its currency, which is what a lot of people are seeing, then having your capital in things like precious metals is potentially a hedge against inflation. Okay, I'm not a financial advisor, just a dude on YouTube who likes to talk about shiny things. Anyway, that's my analysis. Let me know in the comments below what your thoughts on this are. And I'd love to hear what you have to say. Love to know if you think I've got this wrong or if you got some additional insights on this. But always appreciate you watching these videos. Really do thank you for taking time to look at this. I'll drop videos on occasion wherever I find some inspiration to come up with some content. I'll probably try and be a little bit more active here in the future. So apologize for the radio silence. But anyway, thanks so much again for watching. Hope you have a great day. And until next time, keep on stacking.